Hello students, welcome to week 3 for PRL 320. This week we're reviewing financial statements and taxes that are related to business literacy for PR professionals. As you take a look at the week 3 agenda, you'll see that we are reading chapter 4 in our course text. We are also writing a discussion board post that's at least 400 words, and we're working on assignment number 3, which is a financial review reflection paper. The discussion board specifically for this week asks you to write 400 words explaining the differences in tax credits and deductions. These are particularly found within Chapter 4. You don't need to go beyond anything that's not in Chapter 4 for this discussion. You're more than welcome to, but all that is expected of you is to review the information within the chapter related to tax credits and deductions. Additionally, provide a few examples based on fictitious or actionable businesses that relate to some of these deductions or credits or when they would be applicable to apply. And make sure that you post this no later than Friday and respond to at least 2 course mates no later than Sunday. Your assignment number 3 asks you to create a business or nonprofit company financial review. Essentially, what you're doing is writing a 2 to 3 page paper explaining the company of your choice and what you can observe and find out about their financial practices. You will also discuss your take on their solvency and rankings within the industry. In a nutshell, you're picking a company of any choice or the PR department within any university or nonprofit or anything and conduct research on their financial practices. So pick a company of your choice, small, big, large, national, international, and write a 2 to 3 page paper explaining the type of company they are, what you observed and what you could find online about their financial solvency and their financial practices, and then write a paper about that, how it relates to Chapter 4 as well. If you do choose to pick a nonprofit, there's websites like GuideStar and things of that nature that actually provide you with all of their tax returns and things like of that. Those types of financial documents that will actually be very helpful for this assignment. So it is encouraged that if you do pick a nonprofit, look at their website, but then also go to GuideStar. It's a free website that you can review for free portions of the required reporting that they're supposed to release to the public as part of their tax obligation of being a nonprofit. And you can go in there and find some more information about it. That organization, that's only for nonprofits. And it's a very good choice to do because it'll provide you with some very clear and upfront information about the company that maybe you didn't or wouldn't have gotten on the website. To briefly review, a financial review statement is really, or a financial review, the statement comes from the financial review, is a service under which the an accountant of your choice obtains a limited assurance that there is no material modifications that needs to be made for a company's financial statements for them to be in conformity with applicable financial reporting frameworks like GAAP and IFRS, which we've talked about before. So they're used to maintain conformity, and a review does not really require the accountant to obtain an understanding of the internal control or to assess fraud risk or other types of audit procedures, but really the review is done to determine liability and risk of an organization and in a sense to protect them from future audits. By conducting a review, it will provide the accountant with information that allows them to become aware of all the significant matters that would have been discovered and disclosed in an audit before an actual audit is conducted. So it's very useful and a very important role in business practice. The PR practitioner needs to be aware of these practices because it provides them with any potential communicative issues that may arise if they were audited or if there's any financial mishaps or mishandlings and things of that nature. It's also important in a review that the management takes responsibility for the preparation and the presentation of the entity's financial statements, as well as giving the accountant sufficient knowledge of both the industry and entity's review of these statements. It's really important to keep in mind how these are used and why they are used. Some people post their financial reviews or financial statements in a annual report on their websites. So as you work on assignment number 3, if you're going with a for-profit organization, you will probably find in the annual report the enough financial information you need to complete the assignment, or you can go to GuideStar and find information about nonprofits as well. Reviewing some information from the course text, it's important to know that as we get into taxes and we look into tax credits and deductions and things of that nature, we need to be aware of the 5 types of businesses that are recognized under the IRS. A sole proprietorship is the oldest and simplest and most common form of a business entity. It's a business owned by a single individual. This owner and the business are one and the same for tax and legal liability purposes. The proprietorship is not taxed as a separate entity. Instead, the owner reports all income and deductible expenses for their business on a Schedule C form of their personal income tax return. C corporations, or the C corporation, is synonymous with the common notion of a corporation. It's when a business incorporates. When a business incorporates, it becomes a C corporation, unless there is a special election to become an S corp, which we'll talk about in a second. So C corps in the United States are hugely outnumbered by sole proprietorships, yet they account for almost 90% of all U.S. sales. So this type of economic dominance by corporations stem from the adoption of the corporate form by most of the nation's largest enterprises. So the corporate form is appealing for several reasons. In the exchange for limited liability, the corporation is considered as a tax-paying entity because dividends paid out to shareholders are not deductible from the corporate income earnings and are taxed twice. However, C corps do enjoy certain tax benefits that other forms of businesses do not share. A partnership is a business entity with 2 or more owners. It is treated like a proprietorship for tax purposes, and earnings are distributed according to the partnership agreement and are treated as personal income for tax purposes. Thus, the sole proprietorships and the partnership is simply a conduit of generating income for its partners. Partners have a unique liability in this situation. Each partner is jointly and severally liable. Thus, a damaged party may pursue a single partner or any numbered partner. Limited partnerships is a hybrid form of organization having limited and general partners. The general partner, and there may be more than one, assumes management responsibility and limited liability for the business and have at least a 1% interest in profit and losses. Limited partners have no voice in the management and is legally liable for only his or her capital contribution plus any debt obligations. An S corp is another creature of the tax law. It's closely held by corporations whose tax status is the same as partnership, but its participants enjoy the liability protections of a granted corporate shareholders. This is also applicable and very similar for LLCs. The LLC is a limited liability company and is a relatively new type of entity under the tax law. The LLC is similar to the S corp in that it enjoys the tax advantages of partnerships and liability protections of a corporation, although state laws do differ significantly on what an LLC and an S corp are under their own individual tax codes, but none of the restrictions on any of the types of the shareholders. The LLC is similar to a partnership in the LLC's operating agreement may distribute its profits and losses in various ways. As you understand these types and these forms of businesses, it's important to keep in mind some of the summarizing features of this chapter. So this chapter gives us a good overview of the tax nature related to companies. That's why we're looking at financial reviews and financial review statements this week. It's important to know that taxable income for sole proprietors and partnerships flow directly onto the tax obligations of their owners within their personal income tax returns. There's no business level of income taxation. C corporations and their shareholders are subject to double taxation. This entity is taxed on its earnings and its shareholders are taxed on any distributions made from them. And then additionally, the rules always change for tax codes. So as you may look through some of these financial review statements at the company of your choice, you may see different practices and different things reported in different ways. And that's because the tax code changes so frequently and so often. It's just kind of a way for us to kind of keep a breath and keep current with some of those things. So as we look through the week 3 agenda one last time, we are reading chapter 4 on taxes. You're writing a discussion board assignment with its original post due on Friday and replies due on Sunday. And additionally, you are completing assignment number 3, which is a reflective assignment looking at financial statements and financial practices for a company of your choice. If you have any questions, please reach out to me. I look forward to interacting with you early on this week. Do know that I am available and willing to meet by phone or any way that you would like to see fit in person if necessary also. I pray you will have a blessed week and take care.